Tradespoon and Yellow Tunnel. My name is Vlad. I'm CEO and founder of both companies, and today we're going to talk about weekly strategy roundtable, discuss current market conditions, what to expect short-term, long-term, and review latest trades, what works, what doesn't. For those of you who are new, welcome. This is my brief bio. You can see it here. Basically, my background is technology. I work as a CTO of several fintech startups here in Chicago. Some of them went public. Work at hedge funds, broker dealers. So that's my experience. Some of the companies went public, so I decided to manage my own money using the technology that I implemented. Been doing that for over 20 years. And then in the past year and a half or so, Keith from Options Hotline joined me, who brings a lot of experience in options trading, hedge funds, portfolio construction, rebalancing. So that's our value proposition. And we both do manage our live trading room. So every day we have a live trading room and encourage you guys to join it. Disclosures are very important. Please review them. I'm going to go to specific trade ideas, so it's very important to look at this disclosures. If you're new to trading, I would encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, before we jump into trading psychology, let's talk about current market conditions and see if anything changed. Notable pullback today in financials: JP Morgan, Morgan Stanley, Goldman Sachs. Again, I think sparkled by downgrade. That's the only thing I can find, downgrade. But again, we're approaching the earnings season, so I think this is an opportunity to go long. I'm just waiting for some price stabilization. Let's see what else. Let's look at interest rates. So 10-year yield is stable. Again, latest headline news in the past couple of days, again, tariffs, right? They were due on July 9th, I think on Wednesday. And instead of being due on July 9th, since there were no clear agreements, some of the, or majority of the countries, the way I understand, the letters are going out yesterday, today, informing what they will pay on August 1st. And again, it looks like a fluid deadline that keeps moving and negotiations continue. Markets are not moving. VIX is actually 16 handles, so VIX are low. People kind of be used to the story. Yield is responding. We pull back on better than expected initial claims and unemployment data last week to 4.2. Now we're bouncing on the inflation fears, but no new signal, right? We're staying right at 250-day moving average, trading in a range somewhere between 4.6 and 3.9 in the past few months. So I think yields is supportive of market to continue going higher. Dollar is continues to be weak, so you can see it's sharp pullback in dollar. VIX is low, right? Lower, so we get back to the lower part of the range has been trading on. Semiconductors are leading the market today, continues to try to make new all-time high. We're just pennies away. So semiconductors are definitely stronger. Spiders made new all-time highs. Clean breakout continues to grind higher. We have widening of participation. Small caps, regional banks continue to rally and trading higher. Gold today under pressure. Gold miners under pressure. Silver under pressure. Germany, people are rotating to Germany. They're rotating out of Japan and South Korea since their tariffs are higher than expected. At least they got a letter that's going to be higher than expected. Sharp rally in coppers today. So strong movement in copper and copper prices. We're again making close to year-to-date high. Right, try to break out. So strong copper prices supportive of global economy. So that's encouraging, and copper prices FCX continues to rally. Spiders SPX is at 6,200, 6,226. We were at 6,200 yesterday. That's the short-term support. So if you look at our model, aggressive power trader, for today, model predicted 615 to be support, 625 overhead resistance. We're right at that 620, 622 level. For the next 6 months, model actually doesn't see a lot of momentum, right? It's kind of lower outside of this short-term momentum, right? 620, 630. So this is what the model is saying for short-term. Buy 614, 625 is support. In the next 10 days, end of July, maybe beginning of May, we could be at 645, 640, 645 level, right? If earnings season are better than expected. But then outside of that, as we approach in September, October, end of August, for the seasonality point of view in the past few years, this is when we have higher probability of pullback in the market, anywhere from 5 to 10%, 15% pullback, which we have experienced in the past few years. So we'll see if this year is any different. So that's spiders, and this is our aggressive power trading model. Any questions so far? Wanda, welcome back. Let me know if you guys have any questions. So if I look at the positioning, so the flip point is around 618, 620, right? So the green line basically, even if you don't trade options, right? This is important information because it shows positioning in futures, index, options, very similar setup, where green means that the broker dealer that are trading the other side of the trade have to be delta and gamma neutral, and anything in green basically supportive for the market. If we drop below these levels like 618 or where's the put gamma, next level is 6200 or 615. If we drop below this level, then the sell-off could accelerate because dealers will have to actually sell their position to be delta neutral, and then next level would be 6000. So if I just look at let's look at July expiration, which is coming, and then August. So let's look at July and August. So support 618, the flip point. We do have a gamma put wall at 6000 and call wall at 6000. You can see highest position is 6,000. And if you look at the one standard deviation, we could be just like the aggressive power trader, saying based on a different model, based on AI model and looking at the wave theory, projecting 645. If you look at the supply and demand, one standard deviation, we could be by end of July or August, end of August, we could be at this level, right, or higher. So scenario number one, if I look at the different scenarios, David Feldstein, welcome back. Let me know if you guys have any questions for those of you who are new. All right, so trading is distribution of possible outcomes, right? We always talked about going back to statistics class, right? So somewhere one standard deviation, I would say it's around 6,300, 6,350, right? So this is a 1 sigma move. 6,100 on the other side, maybe 1 sigma move. Right. So, scenario one, we move beyond one standard deviation, right? Somewhere in here, 640, 645, 6450, 6500, right? Better than expected earnings. If earnings season is very strong and supportive for further price action, then we're heading higher. Scenario number two, we're trading within standard deviation, right? Maybe we get to 6,300, maybe 6,350. Right? On the downside, we do have a flip point somewhere, 615, 6,100. So and we know that highest position in put wall is 6,000. Right? The put wall is the 6,000 level. So that's scenario number 2. And scenario number 3, we break 6,000 level to the downside because the earnings season is not as, the bar is set high. We had a pretty significant rally since the April lows. So there are a lot of expectations that the earnings will continue to improve. If those earnings don't meet, or if tariffs go into effect, let's say August 1st, and there is no big, beautiful deal, then, scenario number 3. Right. So I encourage you to go through these exercises, whether you're doing short-term or long-term or medium-term trading. Right. Depending on your style of trading, how much risk you're willing to take, you just analyze different time frame. Right. If you're trading stocks and options and you're holding position for a couple of weeks, couple of months, then you look at this, right? Daily charts. You can look at our aggressive power trader for the model. You can look at the obviously gamma exposure and positioning to make a determination where are the key support and resistance levels. But this will help you to decide how much risk you're willing to take. Right? How much risk am I willing to take to support my opinion? Let's say you think we're going to move 1 standard deviation or 2 standard deviation, right, to the right, because the earnings is better than expected. AI is here to make us more productive. So how much money are you willing to risk? Well, you put a stop loss, right? You basically, if you're a longer term trading, I would use 6,000 level as your stop loss. If you're day trading, maybe I would use that flip point right around 618. And if you're doing longer term trading, 6,100. Any questions? All right. How many of you say 1? How many of you say 2? Scenario number 1, we're going higher, more than 1 standard. Scenario 2 is just trading range bound, somewhere between 6,350 and maybe 6,100. And scenario 3, we're going to break 6,000 level to the downside. Hello, Wanda, how are you? So this standard deviation, the time that I'm analyzing is here, Wanda, is basically July expiration and August expiration. So this is a data analysis for July and August, basically the position. This is where most of the positioning is. All right, maybe 5% correction. Okay, so we'll say 5% correction will take us probably below 6,000. Okay, maybe scenario 1. All right, thank you, Alex. Anyone else? David? Mr. Simon, Doctor? Wanda? Okay. I think from seasonality point of view, probably 5% correction would be, it's feasible, right? 6,000. I agree. So I would put also scenario number 2, that we are trading in this range, right? 62. We're already at 6,300. Maybe we'll, after earnings, maybe even get to 6,400. That's all. But I think we're trading in this range. So I would be a buyer at 6,000, even 6,100. I think these are all buyable levels in S&P. Any questions? JT, welcome. All right, so then how do we help on yellow tunnel? So you have different models, different services. If you look at the aggressive power trader, right, this is the model that runs every day. It's AI model, classical kind of machine learning. It learns on the data, earnings data, open, close prices, looks for the patterns. These are all momentum models, so it does look for stocks that have momentum behind them, and I think we're in momentum trading market. So you have stocks like CrowdStrike, EMR, MO, Microsoft, right? These are all the stocks, and if I place any of the orders, you will actually see them here, right? You can see the positions and orders. If I'm in any like Emerson and Nucor, you can trade options, right? Instead of stock, you can buy options, either weekly options or monthly options, depending on the availability. You can get SMS message every time I trade, and also look at the recordings, right? We have a live trading room recording and AI analysis. And by the way, if you have any questions, you can ask our new AI bot. Pretty proud of that experience. We have an AI bot that kind of also learns on all the questions that we had in the past 10 years and provides you an answer. So take a look, ask questions about Yellow Tunnel, send me your feedback, what you think. But that's aggressive power trader. Basically helps you determine the stocks that have short-term momentum. The model runs every day. You get your email before 8 p.m. or 8:30. Those are the signals, and we send email with these signals. And I'm looking for 1%, roughly 1% target gain, 1% stop loss if you're doing day trading. If you're holding position for a week, couple of days, maybe 2%, right? But these are still majority S&P 500 stocks. You can accommodate for gamma, for the beta, right? How aggressive. So, CrowdStrike has higher beta than Altria. So if Altria looking maybe 0.5%, but CrowdStrike maybe 1.5%. But these are the signals. They are valid signals. We provide you some entry point, right? For CrowdStrike, maybe 500 is where you want to consider entering. 507, maybe that's too late, right? So that is aggressive power trader. And you can always analyze your own stock, right? Coinbase, or if you want to analyze Cisco, right? You can always type in these symbols, and the model will analyze. Cisco's in strong uptrend, continues to grind higher. Maybe 68.52. That's exactly where the stock is, right? These are predictions from yesterday. Maybe that makes sense to buy Cisco, right? If you want to be long Cisco, 68.44. Any questions on aggressive power trader? So you can analyze the trends, entry point, exit point, which is very important to optimize your entry and exit point, because even 1% difference between, or 1.5, could be over a long period of time, could be a difference between being profitable or non-profitable. You can watch the live trading room recordings here, right? So we have live trading room. You can watch the recordings. You can see the history every day if you want to see, okay, what was yesterday's signal. Okay, Bank of America, Caterpillar, Dealer, FCX was a good signal. Strong price action in FCX today. Any questions on aggressive power trader? Weekly power trader, same idea, model, but the model runs every Sunday on the weekend. So longer term predictions, same thing. You can participate in live trading room, but the signal meant to last 5-10 days. I mean, you can hold it maybe for 3-4 weeks. And here you're looking for maybe 2% stop loss. So this Monday we had Bank of America. Banks are under pressure. General Electric also pulled back today. We have Microsoft. Microsoft, I think, down 0.5%, long as the market. Nvidia is actually doing better. Oracle is doing better, and Valero Energy, right? Those are the stocks, the signals that were generated on Monday. They're generated on Monday. Right, so on Monday, if you want to buy Oracle or Nvidia or Valero or Bank of America, then you would buy them on Monday and manage them through the week. I usually hold these positions maybe 1 or 2 weeks. I actually closed JP Morgan yesterday, right? This was, if you go to Profit Accelerator, look at the orders. So I closed JP Morgan right now, but you can see I still have Nvidia position, Caterpillar position, and now JP Morgan is on the list. So now it pulled back. So I'm thinking actually re-entering the trade again. JP Morgan, just waiting for stabilization, see if 20-day moving average will or will not hold. So color coding, it just shows you, are we closer to the entry point or exit point? So NVIDIA 160, we're close to the exit point. So red color basically shows you, if you want to initiate position in NVIDIA, maybe you want to wait till 150, it drops to 158.20. On JP Morgan, we predicted 291, it already dropped to the 1 month forecast, right? 1 month forecast was 277. So green light basically means it's oversold. If you think this uptrend continues in JP Morgan, then this is obviously, you know, a buyable opportunity, because we don't see a lot of momentum below 280 level on JP Morgan. You can see positioning. If I go back to JP Morgan, we actually analyzed that today. 265 is a flip point, 280 is a strike. So you do have a put wall around 260 level, right? The highest one is the put wall. Sorry, right here, gamma exposure, 260. It's 280. 280 is the current level. Next one would be, you know, 260, 270 to 80 strike. So put wall is 280. That's the highest open interest is 280, right? In puts wall. So you know, JP Morgan probably, you know, we'll see if it holds, but this is considered to be an entry point for JP Morgan. Any other questions? And same thing, you can do one standard deviation on JP Morgan. Summit is a strike. All right, any other questions? So that's weekly power trader. Now, both of these are idea generation. We give you guidelines, right? Stock oversold, stock overbought, uptrend, downtrend, sideways trend, you know, momentum. But then you have to decide which stocks to actually trade. So if you go to dynamic power trader, right, then you can see these are the positions that I started this Monday, right? Caterpillar, JP Morgan, NVIDIA. So those are the three positions. I'm out of JP Morgan, potentially thinking about re-entering, but I still in NVIDIA and Caterpillar. So you can actually see my live orders and positions. You can enter your phone number to get a SMS message or, you know, email alert. You can look at the history of my positions, right? And you can watch the recordings. And same thing, you can do AI analysis. So that's aggressive power trader. Earnings power trader is where I trade earnings, right? This week we start of the earnings season. We have Delta Airline. So on Thursday, I will usually try to do option trades. Most of the time it's option trades. And here I'm trying to have outsized returns, right? Because of the earnings volatility, if you look at Delta Airline, right, you can see expected move. So expected move is 6 to 7%, right, on Delta Airline. So either you can, if you think it's not going to move more than 7 to 8%, right, in Delta Airlines, then you can sell iron condor, right, on, you know, because you think it's going to stay within that range. If you think it's going to move beyond that range, then you can be long volatility, right? You can do call spreads, butterflies, condors, directional strategies. So it just depends your view on the market. So I would analyze it and then, you know, put on the trade. So that's Delta Airline, and this week I'm going to do Delta Airline in earnings power trade. Same thing. You would see my orders, positions. You would get SMS message, email when I place the trade. You can analyze other stocks, obviously, if you want to analyze them. Any questions? And then finally, profit accelerator, right? We talked about profit accelerator. Caterpillar, JP Morgan, NVIDIA, these are stock positions. And this is also a signal that you can use. Any questions? Steve is back. Wanda, Steve, Dr. Simon, JT, David, Alex. Any other questions? So just to recap, I know some of you joined a little bit later. Just to recap, my view on the market continues grinding higher. I think 600 level is well supported. You have golden cross. Historically, this has been 60–70% of the time you get continuation and positive return, at least short term. So I think we're trading somewhere between 600 level and maybe 630, 640 going into July, August. And then once earnings season is over, right, assuming there's no negative surprise, that's when the tariffs deadlines will come through, right? Not just for Japan and South Korea, but also for European Union and China, right? And if it's hard to get an agreement with, Japan and South Korea, it's going to be a lot more harder to get an agreement with China. So I still think it's a repetition of 2018, where the market does have a pullback. Alex said 5%. It could be anywhere from 5 to 20%, right? You could revisit the lows if there's an escalation with China and they can't reach an agreement. So all of those scenarios are possible. I think from seasonality point of view, I would start thinking about trimming your long position, especially towards the end of the earnings season. Right. So that's my view on the market. I think for now, interest rates are supportive of this theory. So interest rates look good to me. VIX looks fine. Riskier asset classes like Bitcoin is at all-time high. So that's positive for the market. So I think this bullish momentum continues. China is actually up today. Yeah, we have. Not sure why the copper price is up 10%. That seems to be a little excessive. Summertime, less liquidity. Why? Copper prices are so. Let's see if we can get an answer. Is that a tariffs or something? Tighten global copper supplies at historical lows. Strong demand. Okay, geopolitical tariffs threats from US, particularly under the Trump administration. Proposed 25% tariff on copper, however use these tariffs. Okay, so probably due to tariffs if I have to choose. Yeah, so this is a lot of call buying, gamma squeeze on idea of the tariffs on copper prices. Copper, okay. But this is pretty volatile price action in copper and FCX. All right, any other questions? What else? So these are paid services, free services. We do have video, right? So this webinar video gets posted every Tuesday, Wednesday. We have a blog, which is also free. We talked about Nike this week. So every week there's a different AI analysis of different stocks in my personal experience. So I encourage you. This is published every Sunday. So Sunday, then Tuesday, Wednesday videos. We have different psychology videos. These are the services that we provide. In terms of trading psychology, we talked about, dichotomy of control, positive, negative visualization. Avoid fight or flight response by going through this positive, negative visualization exercise we just went through, so you can determine the position size. It's all about position size. At the end of the day, is how much risk are you willing to take, and trying to predict, right? Going to trading psychology, yellow tunnel. The idea is that not only it's important to predict how well you predict your own, stock market, but also how well can you predict what you will do if this trade goes against. If I'm in CrowdStrike on NVIDIA, what will I do if the trade goes against me? If there's a 1%, 3%, 5%, 10% correction. So trying to know what you will do is a very important part of this journey as a trader. And I encourage you to document that in a journal. I always encourage you in the live training room, everybody to keep a journal, document your trades. Ask yourself many times, or several times at least, why did you get into a trade? Right? Maybe it was a signal, maybe you heard it on Bloomberg, maybe it's because everybody else is doing it. So you write down the reason why you got into a trade, and look at the position size, right? And just go through this rehearsal exercise, right? If you said 1 and you said 6,000 is your stop loss, then you want to make sure that at 6,000 you're not down more than 2.5% on SPX, what we talked about. So, and you document these trade decisions, and if the market does drop to 6,000, right, or breaks below 6,000, do you keep the position? Do you exit position where you're down more than 2.5%? And then you grade yourself, right? If your position was never down 2.5%, that means you are doing the good job in determining position size. Right? If your position down was 5%, 10%, very hard to recover from these drawdowns. So then you give yourself C and D. All that means is that not that you were right or wrong, but you didn't get the right position size, right? Because nobody can tell you, I'm giving you basically guidelines. Cash 30% is a good guideline in your journal to document. 2.5 per account value per position is a risk, but some people it's 1%, some people it's 3%. But in general, we know that if you're most professional managers, the portfolio drawdown is less than 20%, 17%, 18%. Doesn't matter what happens in the stock market. Because anything above that, if your portfolio is down more than 20%, this is when you start trading on emotions. It's hard to recover from these drawdowns, and then that's not good. Right, so you want to avoid these large drawdowns. The only way to avoid it is same position size, right? Number of positions, 4 positions, 2.5%. Right, doesn't matter stock options, but that's what I would encourage you to practice on. And in the live trading, you can always ask us questions. We'll be more than happy to answer them. Some of the concepts to cover, I would learn about prospect theory, right? If you don't know what it is, just read it. But this explains why all of us have the same issues, is that when the trade goes against us, we cut it short. But when the trade goes against us, we usually hold on to the losers too long, right? And to the winners, we're too short, right? Because our feelings and the way our brain is wired is that we have asymmetrical relationship with gains and losses. So it's very important to learn this concept. It's a behavioral economics. It's studied in all the financial courses. Every professional trader knows this and studies this and learns it and read books. Daniel Kahneman got actually a Nobel Prize for this, and he wrote a book, right? Thinking Fast, Thinking Slow. Talks about prospect theory, utility theory, different biases. Read. I think if you want to be successful in trading, you have to read books by successful traders or successful psychologists. So this I think is a very important book for any decisions you make in your life when you're faced with uncertainty, right? Whether you're a doctor or lawyer or you direct airplanes, anything there's uncertainty and you don't have an answer, you have to recognize how you make your decisions, right? You have the system 1, system 2, fast decision-making process based on your biases, based on your adrenaline based on your, knee-jerk reaction, right? So this is all wired differently in your brain, right? Using different parts of your brain versus slow, right? Where you keep a trading journal, you keep trading plan, you get a one-on-one coach, and you document your trades. And sometimes you need to make decision in fast mode, right? Sometimes you're in a position and market is moving, you don't have time to write a journal, right? Or entry. So I get it. But most of the time, that's not the case. So you have to know in which system you're making your decisions. So great book. I encourage you to read it. I think this will make you a better trader. All right, Alex, David, JT. Dr. Simon, Steve, Wanda, any other questions? Try out our services, right? I mean, we have Platinum where you get all of the services. So just try it. If you're trading stock options, you want to know what I trade, I would choose Dynamic Power Trader. If you want an earnings trader, kind of these, 100% return overnight, 200% overnight, try Earnings Power Trader. Obviously probability of success is lower. We don't make 100% every day, but more often than not, using the way you structure your options, you could get 100%, 200% return. But very speculative, right? Speculative. Dynamic Power Trade is more conservative, right? Lower returns, maybe 20, maybe 30% return, but much higher probability of success. And then Profit Accelerator is just stock trades. If you don't need live trading room, you just want to know signals, then Aggressive Power Trade or Weekly Power Trade. All right, any other questions? All right, guys, you're awesome. Thank you very much. Have a great day. Thank you for participating. Next, same place next week on Tuesday. Hopefully to see all of you there. And we'll see you guys soon. Thank you very much.